What exactly is investing? How do people grow their money without working more hours? Is investing only for the rich, or can anyone do it? If you've ever been confused by terms like stocks, compound interest, or portfolio, you're not alone. Today, I'm going to break it all down in the simplest, clearest way possible. By the end of this video, you'll understand what investing really is, why it's so important, how it works, and how you can start. Let's dive right in. What is investing? Investing is the act of putting your money into something with the hope that it will grow or generate income over time. Instead of letting your money sit idle in a bank account or under your mattress, you're putting it to work so that it can make more money for you. That something could be a stock, a property, a bond, or even a business, a fund, or digital assets. The goal is simple. Put your money into an asset, get more money back than you put in. That's investing. The question now is, why should you invest? You might be wondering, why not just save my money? Well, here's the thing. 1. Inflation is always working against you. Inflation means your money loses value over time. What you can buy with $100 today might only be worth $50 in a few years. 2. Investing helps your money grow. By investing, you beat inflation and grow your wealth passively without trading your time for money. 3. You earn money while you sleep. This is what people call passive income. Your money starts to make money, which then makes more money. This is the power of compound interest. The concept of compound growth. Let me introduce you to what Albert Einstein called the eighth wonder of the world. Compound interest. Here's how it works. Imagine you invest $1,000 and earn 10% per year. After year 1, you have $1,100. After year 2, you earn 10% on $1,100, not just $1,000. After year 3, you earn 10% on an even bigger amount, and so on. Over time, this compounding effect turns small investments into large sums. The earlier you start, the more time your money has to grow. Types of investments. Let's now explore the main types of investments and how they work. Stocks. When you buy a stock, you own a small part of a company. If the company grows, so does your investment. You can also earn dividends, which is a share of the company's profits. Bonds. Think of bonds as loans. You lend money to the government or a company, and they pay you back with interest over time. Bonds are generally safer, but offer lower returns than stocks. Real estate can generate both income, rent, and capital appreciation. Value increase over time. 4. Mutual funds and ETFs. Instead of picking individual stocks, these funds pool money from many investors and spread it across various investments. They're great for diversification and are managed by professionals. 5. Index funds. A type of fund that tracks a market index like the S&P 500. It's a low-cost, passive way to invest in the overall market. 6. Cryptocurrency and alternatives. These are newer, riskier investments like Bitcoin or Ethereum. They can be volatile, meaning big ups and big downs, so approach with caution. Risk and reward. Here's a golden truth about investing. The higher the potential reward, the higher the risk. Stocks can rise quickly, but they can also fall. Bonds are stable, but grow slowly. Real estate can make you rich or leave you broke if not managed well. That's why you need to understand your risk tolerance. Can you handle seeing your investments drop in value temporarily? If yes, you can go for higher growth options like stocks. If no, you might prefer safer assets like bonds or savings. This is also why you hear the word diversification so often. It simply means don't put all your eggs in one basket. Spread your money across different types of assets to reduce risk. Time is your best friend. When it comes to investing, time beats timing. Most people think you need to buy low and sell high to make money, but that's a risky game. Instead, the smart way is to 1. Start early. 2. Invest consistently, monthly or bi-weekly. 3. Hold for the long term. This strategy is called dollar cost averaging. You invest the same amount regularly, regardless of the market's ups and downs. Over time, you buy some assets when they're cheap and some when they're high, but the average cost balances out. How to start investing, beginner steps. Here's a simple 5-step plan to start your investment journey. 1. Educate yourself. Watch videos like this. Read books like The Intelligent Investor or Rich Dad, Poor Dad, and follow trusted financial educators. 2. Set clear goals. Why are you investing? Is it for retirement, buying a house, or building wealth? 3. Get your finances in order. Before investing, pay off high-interest debt and build an emergency fund, 3 to 6 months of expenses. 4. Open an investment account. You'll need a brokerage account. Platforms like Robinhood, Fidelity, eTrade can help you get started. 5. Start small and stay consistent. You don't need thousands of dollars to begin. Even $10 a month can compound into something meaningful over time. Mistakes to avoid. Let's talk about some common beginner mistakes so you can avoid them. Trying to get rich quick. Investing is not gambling. It's a long-term game. Following hype or social media trends. Just because it's trending on TikTok doesn't mean it's smart. Investing without understanding. Never put your money into something you don't understand. If it sounds too good to be true, it probably is. Ignoring fees. Some funds or apps charge high fees. Over time, these eat into your profits. Final thoughts. Investing is the smartest way to grow your money and build wealth over time. It's not just for the rich. It's for anyone who wants to take control of their financial future. You don't need a lot of money, just consistency and time. The earlier you start, the more powerful your results will be. So don't wait for the perfect moment. Start small, start smart, and just start. Remember, the best time to invest was yesterday. The next best time is today. Now, the question is, what's your first investment going to be? Or what's stopping you from starting? Check out these videos where I share more tips on picking the best stocks and making the right investments. See you in the next one.